Hey there, and welcome back to the channel. Are you unsure whether to invest or save your money in 2024? Stick around because today we are diving into the old age debate of investing versus saving to help you make the best financial decisions. My name is Isaac Jonas, and I like to talk about personal finance and investing. I'm also a trained economist, and I love to talk about personal finance and hear stories about people who invest and build wealth. So, making informed financial decisions is crucial for securing your financial future. So, whether you are a seasoned investor or just starting out, understanding the impact of your choices can make a whole difference in reaching your financial goals. One of the biggest dilemmas many people face is deciding whether to invest or save their money. So while saving provides security and accessibility of funds, investing offers the potential for higher returns but comes with some risks. So finding a balanced approach between saving some money and investing that suits your personal financial goals and risk tolerance is very key. That's why each time that I used to go to the bank, I still go to the bank right now, they ask you about your risk tolerance. So that is key. I like to sleep peacefully after investing my money. So let's delve into the benefits and risks of both investing and saving. When it comes to saving, you have the security of knowing that you have your funds that are easily accessible. But there's a thing called inflation. Your money may lose value over time if it is not generating a return that is above the inflation level. In other words, prices can keep on rising, and it's measured by the consumer price index. So in April, inflation in Canada was 3% according to the Bank of Canada, and across the border in the US, it was 3.48% as of April data. So what this means is if you had left your money in the account, it loses value. But however, it's still there, the balance. But if you look at the real return, if you subtract the inflation, it will have decreased in terms of the purchasing power. So there are quite a number of fixed income options such as buying treasury bills and also high interest savings. I did a bit of research and I realized that in Canada, there are actually some other options to just put your money and get out as much as 6%. I checked out the website via NetWallet. I'll put it here. You can see several options, but this is not investment advice. But I just looked up online and I saw that you can get up to 6% by just putting your money in a savings account, which is above inflation actually in Canada. In the US, it's about 5% from what I saw from bankrate.com. So what it means is you can put your money and get maybe up to 5% or more or less. It's average, right? So on the other hand, investing can potentially offer huge returns, but market fluctuations and risks can impact your investment. So factors like inflation, returns, liquidity play a very significant role in determining the best strategy for you. So investing, from what I've seen, is very personal. So as we look ahead in 2024, it's essential to consider these key insights that can guide you to make the good decision. For example, the projected market trends, analysts, they focus that the economy is going to do that. For me, I kind of just look at them for a guideline, but nobody can really know what the market is going to do, right? But I pay attention to the central bank's decisions. For example, in the US, the Federal Open Market Committee in Canada, the Bank of Canada. So interest rate direction is very key because it determines the cost of borrowing, right, and the funds rate. So in other words, it's the monetary policy. It affects the market in a big way. And some economic indicators like GDP in Canada and the US, if the GDP is going up, it means the economy is growing. It might be also some other sectors like services sector, manufacturing sector, and job numbers. I've done videos where I share some economic updates regularly. Those numbers, they are very, very key, and they are released regularly. So as an investor, or even if you are saving, it's important to pay attention to those and stay informed and adapting a relevant approach that makes you achieve your financial goals. So in summary, the key takeaway is that it is important to align your financial strategy with your goals and your risk tolerance. I can't state that enough. That's very, very important. Whether you choose to invest or you choose to save, the risks that come with that, you should be aware of them, right? So that is a very good basis for building a strong foundation. For example, let's say if I want to buy a house in the next 6 months, if I put that money in the market, yes, I could possibly put it and make more money, but the risk is that it might actually drop, let's say in the 5th month, when I want to put that money towards the down payment. And then that would put me in a difficult position. I could potentially lose money. So in that case, I could possibly put that money in a fixed checking account and get a 6% return per year. And then I would just, withdraw. The money is there plus the interest. So those are things that I consider, and there's no one size fits all for each particular individual needs. So financial planners, they come handy. For me, I do my own finances, but some people, they go to the bank, they have financial planners run their numbers. It is very, very important to have an idea of those things and the risks. So if you found this video to be helpful, make sure you explore more financial tips on this channel. We would love to hear from you, and please share your thoughts if you prefer investing or saving in this current economic landscape. So don't forget to like and subscribe on this video so that you get the notification bell for more insightful content. Thanks for watching, and see you in the next video.